Right. So tonight, what I want to talk about is pretty much patience in taking your entries, right? So I want to go over specifically what the confirmations are of looking for a trade, right? So when I see it, or at least I will have the system in place in order to take the trades properly, right? So you know what you're looking for. Now, it's going to be hard regardless because of how trading design, right? Plenty emotions, real psychology, all that kind of fancy thing, right? Now, if it is you do um, eventually you overcome the emotions, then you wouldn't become profitable. Like, it don't matter what you learn here, unless you defeat yourself emotionally, you always lost, right? So you have to at least stick to the rules now, right? To be able to look for your proper entries and them kind of vibes now, right? Because we just know what to do, we just don't do it, right? So the system would once you at least you adhere to it, you stick to it, you would be able to get profitable trades, right? So one of the first things we be looking for in trading obviously is the money. As I just say, forget the money. The money is the last thing you would get, similar to any other business, right? When you open a business, you have to invest your money, you have to find your customers, get your products, set up your place, buy your equipment, test out your thing. You gotta do all of that, before you actually make any money now. The last thing it does do is collect the money when somebody come and buy. But you have to create the whole infrastructure first, right? So you understanding our trading system that does work. Right? As all you could see, we replicating the same thing over and over with consistent results, right? We had a fight with the psychology, understand that once we stick to this system, we would get the results. So the results based on your system, not based on how you feel essentially, right? As saying that, we all know it hard, but you know what I mean. So by now everybody should know the strategy, right? So you just go over it quickly, but I want to take more zoning on what we actually looking for in particular, right? So as you know, the strategy is draw your trend line to find possible entry points in the market, right? We join the trend line on the daily. So the first thing, we start the daily, pull our trend line, right? That's to find possible entry points. So on the TikTok lives and whatever and thing, I tell them to understand the trend, but for we in here, everybody here have some level of experience. Is not only to find the trend easy to find, because what you try and see where it's going. It's really to find entry points, right? It's to know where the market may turn around from on a higher time frame. So it's something that is neglected a lot. Right? I say that because it happened to me. So everything I teach and all here, as much as it have similarity with other things, is mostly experience I just teach from, right? I take real strokes. Right? So like in this case here, pulling a support on a daily could be kind of redundant, right? So you could pull the trend the support from on the forward, right? You will get a cleaner support here. Right, so once again, it's pretty much common sense, right? It's not necessarily nothing too special, right? Just make it make sense, right? Cool. So we could get with simple little support and resistance here. We have we trend line. We see we far away from it. Even the 200 moving average, which does act as support and resistance, also far away from the price. So we're in a huge uptrend, and as I can see, the 200 moving average also coincides with support and resistance with their trend line, right? So your moving average just act as support and resistance also. So you can kind of use that roughly, right? Nice. So when we line up we zones in particular that we take in trades from, right? We know where we're looking for in our range. What we just look for to take our entry is breaks of structure, right? So when you get your overall zone and you line up where you're looking for, right? You know this is a high up here. You know this is your low down here. And obviously you wouldn't wait all the time for how much of a candles to reach quite down here, because it may never, or until, well, in this case, this area here close to the price. So you might be able to wait for it to break all time highs. Again, that is the anticipation, right? Somebody say something, eh? Let's unmute yourself if you have something to say. All right. So we know we have the trading range up here we're looking for, and we have the trading range, right? So you wouldn't wait for this to come back down here. It probably wouldn't, right? This was the pullback that I was looking for during the week, right? Remember, I said we are looking for a higher time frame pullback to create structure. This is what I mean when I say that, right? So remember since last week, all Thursday, it was Wednesday, Thursday, Friday, all them days we get this huge move here, right? And I was keep saying, boy, like wait on the pullback, right? Because we can't just keep getting green candles. So this is what I mean to create a pullback for a structure. Right? We get a little sell scalp in here, we get a few little buys in here, right? So we make a little money in this little area here, right? So we're looking for the market to continue doing the same thing. So we get the pullback that we was looking for, and it created a structure. What I mean by created a structure, it created a resistance level and a support level. That's what we need to identify our trading strategy, right? We need the market to break out of one of these zones. Remember, what has caused the market to break out is money, volume, right? So we need plenty volume, plenty money to break out of these zones. So chances are most likely when the market break out of these zones here, with a bullish engulfing, a big green candle, or a bearish engulfing, a big red candle, right? So this black candle, for those of you less experienced, would be red, right? On your screen, I urge you to change the colors of the candle, especially the red one. Psychologically, it does play with the mentals, right? So try to keep it more neutral colors. So the green is always good, we know that. Most times they're buying, right? So green is always good, and the red candle, don't like play with it. So you can change it to any other color you want. It will just kind of even out the intensity of it, right? So that's a pro tip. I guarantee you it would help if you do it. So it created the structure. So what we're looking for is for the market to break a zone. What I mean by break a zone? You see, when you have support and resistance, you need the market to break out of that support and resistance area. Right? So for example, here would have been a support and resistance area. So this is a perfect example. This is part of the reason why I wanted to teach this in particular. Right? So within our big trading range, which is on the daily, right? We coming down and we're looking for 15-minute breaks of structure. Right? So that's what we're looking for. So we're taking the entries on the 15-minute candle, and I will show you how to come down to get your so-called sniper entries. Right? You're looking for the market to break one of these little areas on the 15 minutes. So your 15-minute candle had a break. Also, your 15-minute structure had a break, right? So you entered on the 15, your structure breaking on the 15. Now, a breakout structure just look like this. A big green candle that break out of our zone, right? So we're looking for this here, a candle to break out of our zone. So this is a 50-minute resistance, right? So remember the market come, chop around here, come back, chop around here, right? So you don't want to break this little area here if you look at it. We're looking for the market to break out of the zone, something like how the market break out of the zone here. When you're in this range and you identify a 50-minute support and resistance, right? All this is support and resistance on the 15 here. All this little area here, right? This come like a support area here. This come like a support area here, right? When the market break out of this zone, what you are looking for before you get keen on the entry is to see a big green candle. So this is one of your confirmations. We're using price action as your confirmation, right? Forget the indicators, forget everything else. We're looking at price action. We're looking at candles breaking the zone. Now, when you see a candle break the zone, that is your first indicator of momentum. That means that the market might go in your particular direction, right? So you're looking for this. When the candle break a zone, you are waiting for this candle to close. Do not, so if for the ones who hear a little while, you will realize that I might wait 30 minutes before, I might still not say potential buys or sells coming, and then you might get a signal, if any, 30 minutes later. Sometimes you don't hear nothing from me again. I mean, the market didn't do what I wanted, right? So when you see the market coming up to a particular zone, so you say you have this resistance area here, and the market come up to the zone. Now you see the market, the price reach somewhere up here. An next example is, let me say, the price reach somewhere up here, close to breaking the zone. What you are waiting for is the market to break the zone. But to identify the potential move, you need the market to break and close. So sometimes you will get things like this, a wick, right? The market break the zone with a wick. Now, most times we just get FOMO and we just enter the trade before the market actually confirm it breaking the zone. So remember, at some point, this candle will be green. Now, this candle, every candle, does move very erratically. Now, in hindsight, they go like, yeah, well, I would not trade. When you sit down watching it, it does move very erratically and it does show you things that not even there, right? So you need to be confident in what you're looking at. So that way you trust in the system. You're trading based on the system, not necessarily emotions or what you're seeing on the chart in real time. You're going with the system now, right? Now, it's easier said than done. I am not denying that. But that is what you have to do. It is catch me too, right? It is catch everybody. Nobody exempt or immune to it. We are all human. But you need to trust the system, essentially. And I'm only talking to all that, talking to myself also, right? You need to wait for the candle to close. Do not, under no circumstances, ever, anytime, enter a trade when the candle is still moving. Now, you could do it, I'm not saying you can't and get away. I'm not saying that I haven't done it and get away. I ain't saying that with the experience, you ain't gonna get a sniper and just enter when you see momentum. These are things you would work your way into. Right? Like it's at that particular trade we would call like this little, we call that little sell here, short, a small sell we would call. Right? And based on experience, I was able to see the momentum of the candle and we jump in here and we catch a little thing. Right? I think we catch it somewhere from, I think I'll send this sell somewhere here when it break the zone. So that is enter in this momentum. I know the market would not come back based on the energy it had. Right? And I think we come out the trade somewhere around here. Right? By this little structure right before it turn around. Right? Something so as a little scalp. I ain't saying this can't be done. And this isn't possible. It is. Right? We can more than do it. Work your way up to that. Right? Don't get fooled by what you're seeing on the chart. The candles will shake you out. It's designed to shake you out. Right? It will tie you up. So you see like how this candle here pushing up on it breaking the zone? Nice. That is your first indication. You want to wait for this to close full bodied. A full body close indicates that the market has strength. Right? So the buyers have enough strength to break the zone and keep the price up there. So that is your first indication of what it is you're looking for. To confirm the zone, and this is the perfect example of why you have to wait. Although the market break here, and this would be green going up the road, you have to wait for the other candle to close. Now, this is an important tip, right? You might feel like a trade would leave you, and it probably will, right? It is okay if a trade leave you if it don't get the perfect entry that you're looking at. This big buy here would have left us last week. We sit down and perish through all of this. Some people might be jumping, some people might be think little thing, whatever, no problem, right? But you run the risk of this pulling back on you anytime. Right? At any point in time, this could be a portion here. This could have just pulled on. You don't know. So you have to be careful. So that is why you're going based on the system you have. Right? So you get in the system. You have to wait for the market to confirm the zone. Sometimes, my dear traders, you will not get a pullback properly as you wanted, and you might not get the entry. Leave it alone. We just feel like we're going to miss our trade, like you ain't going to make no money again, like this is the only setup it have. This isn't the only setup it have. You will always get one. This is a fluid thing. Treat yourself and what you're doing as a professional trader. Right? Don't just come for the hustle and the money and the thing and treat it with respect. If you don't take your time with this thing that you're doing, you are going to end up worse off than you started because you are going to bleed money. You're going to have hemorrhage money doing this, bro. Because they go blow it, they go buy 100 and they go blow it. They go buy 100 and they blow it. They go buy 100 and they blow it. Understand? Before you know it, you're $2,200 less than you had. Right? You don't do hardy money already. Right? Look at example of why you wait. Look, the market now push up on the pull the market. It never break the zone. So you have to wait for it to close. Right? Because you don't know, because you could have end up, you're thinking the market going and now you're in a little drawdown. And drawdown that could have possibly be avoided now. Right? And now you're going to be sitting down in there because you're only 1 minute watching this thing flip around everything. You still have a next 15-minute candle to pull back. You don't know. right? So you had to hold on and wait now. If you don't get the entry, I'm telling you, let it go. Don't take it, right? I know we just want to trade. Forget that. Because you run the risk of putting yourself in a drawdown and losing, and more than likely, because you will be a beginner trader, you would know when to cut a trade. That's one of the biggest things that most beginners would do. Don't know when to let go. It is almost be like physical pain to let go a losing trade. We just always hold the losing trades too long. Everybody here guilty of it. Nobody on this call exempt. Lego the trade, so to avoid having to even put yourself in that position, wait up front, right? It could still happen to you. I ain't say no, but wait. When the market break whatever zone in particular, you're waiting for the next candle to close higher or above the zone, or ideally, you want the market to pull back into the next support and resistance area. So let me show you what that does look like. All right. Okay, there we go with here. So let me say we identify this little zone here, right? Let me say there will little trading zone here. When the market break out of the zone, because this could be a full body candle like close, right? It won't always look the same, but you're just looking for a candle to break the zone and close full body. That's what you're looking for. What you would wait for is to see a red candle. We take buys on red candles. We take sells on green candles. You're more than likely be doing it wrong now. We're doing it back to front, right? We just buy on green and sell on red. But if you're selling on the red, remember the market going up and down, up and down, up and down, right? So the market does go up after it go down, So just pull back first and then push. So what you want to do is catch the pullback. So when I hit people say buy the dip, this is what they mean. You buy the dip. So the money, it come like a slingshot. The market pull back and build momentum to push forward, right? Because every time you get a little pullback, you get a little push up. And you got a little pull back, a push up. You got a little pull back, a push up. So that is what you're waiting on now. You're waiting for the little pullback, and then for the market to build energy and push up. What you're looking for your pullback is you're looking for the market to pull back and close anywhere within this little zone it now break from. That is the pullback you're looking for. That is where you would find the entry. If the market come and close too low below, because we will do fibs, right? I feel this might be my last beginner class, right? As I say, I see people hand raised. If it is you need to say something, you can just unmute yourself, right? Don't hold up your hand if you're doing it on purpose. Okay, you're not getting audio. That one I can assist with. It's have the mic button on the screen now we can assume it's not. If it's anything but type of the question, I'll see. I would see if I can how best I can answer if you're ready and getting through the audio. Right. In the meantime, so what we're looking for is for the market to pull back into the zone it now break from. Anywhere wrong here, right? It wouldn't look perfect, but once you do the experience, you train your eyes, you will get it, right? So this is what you're looking for. You're looking for the market to pull back into this little area here, and you're finding the entry here. You gotta be brave, right? Once you get the market to close higher, then you just enter and close your eye. That is pretty much it. We don't have much more control beyond Nana, right? They don't have nothing to say extremely perfect, So when you wait for your 50-minute candle to break and close, you're then waiting for another 50-minute candle to pull back. You could take an aggressive entry here, right? On this close, if you're doing it, you're doing it for a very low lot size, right? The smallest one possible. I just do it sometimes just based on experience. I'll take an aggressive one as the market close here, depending on the momentum. Right? And you might get it, so sometimes the market is just push on, you still get a small trade on the inside, but ideally what you would do is wait until they get a red candle. So you're waiting to get a red candle somewhere in the zone. Every time you don't get it. Sometimes the market push and it just go. Right? Leave that trade alone because you miss your entry. Trading is entry. Right? always entry, always where you take that trade from, does make the world of difference to you. Right? So if you don't get a good entry to take the trade, if you get a bad entry, it will make the whole trade go haywire. It will play with your emotions. It will do so much different things to you. Right? So just leave it alone if you don't get a good entry now. Right? So let me go with this one again. And this is our next example. And this is something that I would show you to experience-wise, right? So the market break this zone here. Once again, it didn't look perfect. Right? Now you could have pulled this quite up here, but then that would not be ideal. Right? So around anywhere around here. It didn't look perfect. But you still see a gap big candle and the market come on it close. So so and next thing I know too, so we already had to start to go push a little bit more advanced. So I'll try to make some more beginner videos. Like I want to touch on some of the chart patterns too now. Right? When you see a candle like this closing, you don't enter on this. This here, dojis mean signs of reversal. So a doji candle, which is this. So I think I have a chart pattern guide in the group there. You look at it, right? So trading is also something called intrinsic learning. It's something that you have to practice. So I could tell you everything here, but unless you go in there and you do it and see it for yourself, it still wouldn't matter, right? So you still need to put in your own work. You have to want this, right? I know most people just want the money, but the money is hard won, right? They don't just get the money. You have to put in work. If you don't, you wouldn't get it. So everybody would make it simply because of the lack of effort people would put in, right? This here is a doji candle, which means a sign of reversal. Now, usually when we see candles like this, after a full body candles like this, you just get a big sell, right? So this here is a very dangerous thing to see, especially after having this candle. So you will recognize that with chart patterns, right? It may be too much to soak up right now. You don't have to. Now, the reason I mentioned this is so that you don't, even if you don't consider this candle as a pullback candle. Right, so if you see it close like a doji, you stay away. So when you get this candle close, sometimes you might see and say, but I read to see what the next candle do. If this candle here is struggling and looking like it might close as a doji, sometimes I might cut a trade or I may not enter. Right? Because this here would form something called a evening star, and this would sell off. Right? And you might get a big red candle. It just looks similar to this. Okay, this is kind of considered as a doji also. Right? So the market go push like this, you will get a doji. And then you will get this candle. So this is a evening star chart pattern right here. So this is something to avoid now. But you would only recognize this with experience and with studying up your little chart patterns and them kind of vibes now. Right? So when you see the market close like this, they will say you got to pull back and it close like such. I'll doji, try your best not to enter that trade. Wait and see. You never know. Sometimes you can push on, sometimes you get licks. Right? Most likely you might get licks. If not in a bad licks, you end up in a drawdown. Right? We're trying to minimize that. So when the market, you're waiting for the market to actually kind of come as close as possible. So sometimes the market is pull deep, like this here. For example, sometimes the market is pull deep like this, right? And this might frighten you because you might think it will continue lower, but it did close above. You will take an entry here. So sometimes the market pull deep like this, and then sometimes the market do pull deep like this. Sometimes you get this, right? So it's basically the same, but once you get the break and the market close anywhere above, anywhere like you tap into here, you enter the trade, right? So like in this case here, your entry would have been here, the close of this candle. Once you're risking properly, you're able to put your stop loss below the low. And then your first target is always a 2-to-1. More than likely, with the move here, you will get a 2-to-1. Because we analyze higher time frames, the traders most of our trades is like 5 and 10 and all kind of thing. And we get big moves. But to begin with, you will get a 2-to-1 for sure. More than likely, you can aim for this. Right? So chances are you will get this. More than likely. Right? So you enter anyway here. So you go get a little flip around, the market go up and down on here, but this will be a real nice shade, like a minimal draw. Right? So this will be a pretty one here. This is what it is you're looking for. So you're looking for the market to break a zone, a 50-minute zone, because it could be in a trading range, which is good be on the daily, and then you're waiting for the market to pull back. But you have to wait for this candle to close and you pull back candle to close. If it don't close and you enter too soon, you get licks. Right? This and all to I was talking about this an example and all of what could happen. Right? The market designed to frighten you. This here is a breakout. You realize the market didn't pull back, so this might have been a trade you miss, right? Because you get a break, but then you never get no real pullback. Now this was actually a pullback, however long after. Look how big and red it look. This would be a trade even if you jump in early and I sort of chop around here. If you hold the share too long, you might have still come out because you feel it going and sell off, and then we say you move your stop loss too soon. Right, you'll still come and get, like we say, you pull your stop loss still quite up here. Right, you'll come and you'll get knocked out right here, like get small money if you even get the small money. If you leave your stop loss below here, you might exit the trade because you're gonna see this, get frightened and come out. Right? But this is what the pullback does look like sometimes. We can't always avoid it. So I needed to understand how fluid the market is. Right, so you don't have no rigid set of things. So like some people they will come, like some of them know have a bot. Some people will come and that bot does what about working? But they will say, the bot does do 20% on average, right? And they were wanted, but they were wanted as get it and do nothing again for the rest of their life. And even if it is an automated system, you still had to monitor it. I say that to say, there is no one thing in this market that is going to keep you consistently profitable. You would lose trades, right? It's an emotional thing. Sometimes you cut ties too early, right? It's all kind of things. Sometimes you get the perfect entry. Plenty of things has happened in this. It's a very intense place to be, right, on this chart here. So I need to understand that to understand how it does work and all the little nuances of it now. So what you're waiting on, what you're looking for is to get these little perfect entries whenever you do get them. It don't have to be every day, it don't have to be every trade. Sometimes a week could pass. And that is what I'm trying to get at now. Right? It's so fluid, it's so volatile, it is weird now. Right? So we wouldn't always get exactly what we're looking for. But we know what we're looking for. And if we get that thing that we're looking for, chances are you will get a winning trade. Some trades go hold more than others. Some trades the candles just move like this. You look to still buy after. Right? There's a shakeout, man, for spite. It's a algorithm now, boy. Right? It's going on higher by me and thing. So what I want you to understand is that though there isn't any one perfect thing that you would always just do and you always just get no draw down and make real money. Nah, it don't work like that. Right? The reason why you need to always wait. This year would have been one of the more pretty ones or perfect ones. Still maybe not because we spend this is nearly an hour we might have wait for this trade. Right? So this is still never the most beautiful one there is. Some of the pretty ones you touch and go now. Right? Those are rare. Big trades is rare. Right? Look at this here and all. We now talk about this, so the market never closed. It was now full bodied up here. Watch it come down here now. So you don't know. Right? You might have no one to enter down here. So that is why we wait now. Okay, remember if you enter too soon, now you have to down to all this. Like, you can't cut ties with trade. You don't enter somewhere here. You don't enter here, you can't come out. I do you see you draw down cool, so now because the market make you feel it induce you to buy. Now, more than likely, it may buy, right? We gain a series of higher highs, right? So the market is building momentum to go. But you don't know when that's going to happen. It's going to happen when it break and close above. So until then, you hold on for the trade, right? This last week here, I was looking at this, right? This is after we get a little scalp, right? So we get a little sell for those of you who get your sell. We get a little sell, and then it's at the push up. Now this push up that we see here, this would have been like a little 50-minute high here. I sit down and watch this trade, bro. Right, looking like it at all the momentum in the world to go higher, and big sell after, licks after now, boy. Understand? So you had to be careful with it now, boy, until it really break and show you that that proper close now, boy. So you have to do it. So let me watch an example of if it is you don't adhere to the system, what will happen. This thing here is what will happen to you if you do not adhere to the system. You get your 50-minute high, it break it with all the vigor in the world, and the very next candle did not close above. So remember, the candle is supposed to come and tap into anyway here. Right, this little area here is where you're looking for the market to come and tap into now. Right, this little zone here. The market didn't tap back into here and close above. It didn't gain no kind of rejection. Right? So then what? The market gave a big induced buy and sell all the way down. If you didn't wait for this candle to close, this trap here in a long. Trap here in a buy trade, you get a sell off. This is why we let's wait for the other candle to close. Now sometimes, as I say, the market go come here and then your very next candle, just get a wick and shoot off. Boop, go on, leave here. You go and you know what, boy, I get a trade, ting. Basically watching the third candle with the other confluence center. It's not the third candle. Right? It's not the third candle. It's the second candle. But you have to be keen on watching the second candle. Right? So once the first candle break, right? So once the first candle break, you're waiting for the second candle to close higher. Right? So so the second candle looking to close higher is an ideal trade. Right? Is an ideal trade, but you don't always get it. This candle break here, you're looking for the second candle to tap into here. It did not. It shoot up, and then you get a pullback. So ultimately, what you're waiting for is to get red candles to tap back into the zone. So you're looking for this, right? Now, ideally, you want it to happen on. This is what you're looking for here, right? Ideally, you want this next candle to be the one to do it. That's what we just look for. That is our ideal trade or entry. Right? Once that happens, chances are you get momentum now. Right? So I will explain that again a little bit differently. See if we find one. See if we get a perfect trade there. Right. Is this one here? Okay, so you look, what you want to see ideally in a perfect trade is something like this. Right? You want to see one or maybe two candle tap back in. You don't want to see plenty candle. You don't want to see a red candle too big. Right? You just want to see it kind of like this. Right? You get a break, you get one candle there, maybe a two, and you want to see it close. So you see, if you notice, it come now. Oh, this is your resistance area, right? Formally, right? So you want to see it break, and then you want to see it come now and kind of get some rejection, above this little zone here. So you wanted to come back in and get some wicks, right, with paddy wicks essentially. That kind of what you're looking for, right? So usually just be one candle. So you watch one candle and then the next candle close. Now with learning, right, eventually they would know when they may get a deeper retracement. And then they could probably wait for a little pullback again, and then they could get like a third candle. Ideally, we look for this one candle, right? So we look for like how this break here, we just look for one red candle to pull back and close, right? So like how let me say this was a break here, and they get this one candle to pull back. You see how this and they can enter right here, right? See how we get this one and then they push up. That way we're looking for essentially now, right? That is in a perfect trade, all right? Or like this here, right? Market break, shoot up. You see we get this one candle to pull down here, and then it close. This is kind of what you just want to see. This is a nice trade here. Market pull. That means a real vigor, real energy. It moving. So then you get a big green candle, and then you get the next one. Wick. What? There we are here. So you'll like enter here, right? You'll like enter the trade and you close out this candle here. Now, then a perfect trade. Pay stop loss below the low. You got the rest properly. You know how to do that, right? And you aim for a 2 to 1. Let me see if you would get it. would we have? Nah, we would not get a 2-to-1 in this case here. Right? Would that be too much? Might have had a sit down in the trade too long. Right? But we would have get what? We like get 1-to-1. Still respectable. Yeah? Still take that. Not bad. I 1-to-1 real bad depending on how much you risk on the trade. But this is what it is you're looking for essentially. That's the next candidate to pull back. With more experience, you sometimes make it wait out a little bit longer and see if you get it. Right? But that's what you're looking for. Something like this right here. Yeah? Cool. Back to what you're not supposed to do. You're not supposed to do this. You're not supposed to enter the first. Now, if it, let me say, take an aggressive entry, because sometimes I say I might take an aggressive one for a low lot size. Even if, right, let me say take an aggressive entry here because the market buying, right? If we think in trade, so we're being real, we're being honest with ourselves, right? We expect any market to continue buying. So the market come, boom, push up, no problem. We get the close above. Let me say we're expecting a buy off of the zone because that is what is expected. Nobody didn't expect this to sell more. Right? We know we got to sell, we got to push up, no problem. Right? If you enter here, and let me say your first trade, so your first trade, as a rule of thumb, should be something called a feeler position, a small trade, test the water, right? Try a little thing in there, a low lot size, 0.01, 0.02, depending on the size of your account now, obviously, and a little thing, try a little source in there. Now, what the source is if the trade push up on you, you could eventually, you will get a little thing, right? Well, I could have put more money on that trade, but you still get something now, right? So you fully jar a little bit, right? Drip. Trading is not one big monster trade and he's a millionaire. It's not like that. Chip, piece. You take out here, you take out there, and then you push on, right? No seeing. So let me say enter with a low lot size here. Even if you are wrong, right? Because you're supposed to wait. Let me say the market break back here and you hold through all of this. Your drawdown is minimal, right? Because I expect you to cut ties with the trade on the bottom here. It come and it close back below. So that means the trade not ready. I didn't expect it to still sit down and hold through all of this, right? No, you'll close here. You'll take a small loss. It's fine. The loss you take is nothing. It should be nothing. You should close that with no feelings whatsoever. That $5, loss there, that $10, throw away, that 20. It could even be a 40, 50, depending on your account size now. And if you say you're using the proper on your account big, and that is at $50, that's negligible out of the account now, but that is small thing because your next trade going to be $400-500. So that $50 is not. Now you just test the water, but if you win, you get trade. If not, no seed. Right? So this year is why you must, if you have to take an aggressive entry, you take it for a very low lot size, just a little source, just to see. Sometimes you're right and then go and you ain't get your next entry, you still get something inside. Sometimes you're wrong, but if you're wrong, you ain't lose too much. Now, if the market pull back and then you really say you decide to hold, you trade or whatever, and you get next entry lower down, like we just say you get entry here and this also shoot up. The next entry you enter, like we say past 0.01, right, low lot size, and enter 0.05. By the time that next 0.05 trade move 2-3 pips, it done recover this loss already, so you're in profit. Right? And by the time you reach up here, you have a next trade you have a next trade in profits already. And you're bad now. Right? So now next rule of thumb too, if it is you have to enter aggressively, enter small. It have nothing to say you're going to be correct. You have no guarantees on you being correct. There's nothing say you have to win. Right? So don't play the game to win. Play the game like if you might lose. Most people want to win more than they're afraid to lose. What I does do is I afraid to lose more than I just want to win. That is why I be more conservative with my money. I need my money, I don't know what all but I'm walking away. Understand? I don't wait until month until fund back no account. I don't know if all they have it like that. Me not have it to be trained with no money like that now. So I very, very careful with my little scrimmers. I urge you to be careful with your scrimmers too. Right? It don't make sense to keep blowing your account, and then someday you wish to get one big trade and recover all your losses. The thing that you're doing to blow your account, if it do get you with it, is the same thing you did that blow your account. So if you will happen, you get you once, but you will blow. Because that way you're doing, the thing you're doing is cause to blow 10 times. Even if you win once doing it. Right? Even if you get back all the money you lost, how long it take it to break even? Months? Years? Weeks? Days? How much money you spend before you now break even? Was it worth it? You spend $10,000 trying to get that one trade that get you $10,000. You still at square one. And then you ain't learn nothing because the thing that you do to get you is the same thing that they do to blow your account. So you're going to do the same thing and blow your account. So you're still in the hole now, right? So protect your money. Play to lose more. Now, nobody wouldn't enter a trade that they think they would lose. That just simply doesn't make sense, right? So I'm not telling you to enter a trade you think you would lose. Every trade you enter, you believe you would win. But what I am saying to you is that those are being so aggressive and being greedy. The fact that you're blowing your account is greed. If you are blowing your account, if your losing trades are bigger than your winning trades, that is a clear indication of greed. That is it. Purely, you're greedy if you're blowing your account. Because if you're not greedy, you wouldn't blow. Right? You'll take your time, you'll cut your trades, and you'll go push on. But the fact that you're blowing your account means that you're paying too much money on each trade. More than likely, over leverage, you hold a losing trade too long because you can't accept a loss. Right? So you had to let go sometimes, and sometimes you have to just take the little bit that you have and push on. So this is why we're using these confirmations, right? So this is what I want to talk to you about, the actual confirmations. You're waiting for your candle to break the zone and close, and then you're waiting for your other candle. Sometimes it does happen with the next candle, sometimes it might take 2, 3, but you're waiting to see a pullback. So like, let me say for instance, what we would have done. So again, real-time examples. So even if I push on to that one, let's see what's going on here. Let's see how much emotional struggles that would have been going through if it is you enter the trade too early. You see how much flop around. Everything with your phone, you enjoy down. You get a little blue, you feel you're winning and you enjoy down. Not knowing the RSI high and this might pull back. Right? So you're just paying yourself through that for no reason. Right? So let me go back to we particular trade here. Right? That we had here that the market break from. So remember the market break, this area here, we ain't get none of the trades that we was hoping for. Right? The market never really give you no proper entry, right? We was waiting for a red candle before we take a enter. I think was it Thursday is when early in the morning, early like 3 or 4 or something, so I call a little buy. We like catch a small buy till probably here or some kind of thing. So something so we get. And then the market they do a kind of stupidness. And then I was like, yeah, but for sure buy out of there. But it was Friday and all too. Right? So the patience has come when it is your wait and you're moving particular. So remember we missed all of this because we didn't get a proper entries now. So we wait until they get a pullback. The wait that we waited, that's about me taking no trade. Hold on. This was what we waited for, The pullback into the zone, We wait for it to pull back. Right? Obviously, little experience, whatever I was able to identify, and this was a little buy we end up catching Thursday. So because we analyzed on higher time frames, this was the pullback that we inevitably waited on. So you see how much days or how much candles I wait before looking for entry, and the entry was still a buy. As I was saying, this is how patient you have to be. So from here on out, you are a professional trader, right? You are a financial analyst. Refer to yourself as such, right? As a professional trader, as a financial analyst. I come on the chart here and looking for proper entries. When you come on, as I say, breathe, put on a shirt if you have to. Drink your coffee, set it down, wipe down your desk, thing. You know what I mean, boy? Make it real. Don't play yourself no game. Come here, boy. I see about this thing. Take your time, man. And try to as a professional. Don't come and I see what that thing had and pull your chart and thing. And, yeah, boy, that looking good. Don't do that. Nah. Treat it with respect. Treat it serious. And I mean, give it that respect. And once you put yourself in that frame of mind, and you can come on, you take a little scalp and your thing, you'll get there. Right? What we should be working on is winning trades, right? Forget the money. The money go come, but you would only get the money after you learn the skill, right? So what they should be focused on right now is understanding the strategy, implementing the strategy, and just simply trying to win trades. You wouldn't make any money until you understand what to do to make the money. You understand? I hope that making sense. Right? So all you have time, right? Or you end up in a beautiful program that do not have any subscription. Right? So you don't have no pressure on you to have to produce anything. Nobody no pressuring you to make no money. You pressuring yourself. Right? Take all your time, focus, and you will get there now. So what you should be doing is trying to understand what it is I was trying to show you here and practice it. Some of you will have the prop firm, right? So they could use the prop firm kind of like all the trial run there. Some of you have small accounts, uses 0.01. It's not about the money currently, it is about winning trades. If it is you have, like we say, you know your pocket, you know by just really trying to do something to make a little bit more money, and this is the route that I decide to take, and you know you don't have it like that, demo. Just demo the trades. Simple. Just demo. Demo your shot. If I send a trade, take the trade and make a little money so. But on your own, until you understand what to do, demo. Now, if you demo the trades, right, you will get to see where you stand. Right? You would know for a fact without losing any money. If it is, it makes sense, right? So we protecting capital. So as much as we play in offense, we play in defense, right? Trading is also a war of attrition. What that means is that only the strong will survive. You have to be able to stay in this thing long enough to be able to make any money and see any kind of profits. Right? So you can't end up falling off too early. So some people just come on and it's too hard, or it find it taking too long, and then they fall off and they're on to the next thing. Right? It's not like that. You have to come on, give yourself grace, give yourself a little bit of time, and you will get there. Right? So it's a war of attrition. Be able to stay in the fight long enough to see the rewards now. So you had a battle. Right? But if you can't battle, then you wouldn't really make no money because you will leave too soon. You can leave right on the cusp of actually getting there. Right? So I hope that makes sense. So as looking at this here, once again, perfect example of why you had to wait. We'd be flopping around in here dangerously, and I'm nothing saying that this is going on by. Because we had all-time highs once more. This could be always be a 10 zone. Once we break here, we're going to break here with a real figure, more than likely. Or the market going and try to keep the price within here. So we had to wait to see what's going on. So now is not the best time to take a buy nor a sell. We just basically no man's land for right now. And so you guys watching the zone until something happen, you know. More major. I had my lid set here, but I ain't take no trade obviously because the market just break and shoot up, and the market not open too. So how is it not open? It could be heavily manipulated. Right? We know what going to happen until something really happen, until we get a nice clean structure. Right? So clean structure meaning a proper range identifier. So if this pull back here and it close, you know, you might look for a entry or whatever, right? So you don't have to trade every day. You don't have to win every trade either. You know, if you could just come out the week in blue, you're good. Right? So you don't have to come out with $1 million in profit. You just have to come out without losing. If you could. And coming out losing without losing one of the hardest things to do. So I just tell people, and I tell all there, if you enter 100 trades in the week and you leave break even, you are an exceptionally good trader. Exceptional, you're very good. If you enter 100 trades and leave without losing any money, you are an excellent trader. The barrier is so low to be a good trader, it's unbelievable. If you leave the charts with $10 profit every week, you are a profitable trader and you are exceptional. You are in the 1% of people in the whole wide world that can do this. You know why? Because most people, the next 99% of people, cannot enter trades and leave without losing. So if you could just not lose, you are a great trader. The barrier is so low. It's that low, and I just show you how difficult this is. So if you could overcome that and just leave break even, you are real bad. Most people, including the vast majority of you on this call, cannot leave the markets with money, and you cannot do it more than a week or two, consistently. You can't even leave break even. So let that be a test. You know what I mean? So forget the money. The money go come. Just win more trades. Winning trades by practicing the system, adhering to the rules, and you know what I mean, looking out for the results like that, right? Not necessarily the money, just more the actual skill. Yeah. So that is our simple confirmations. I want to maybe sometime during the week here, I will just go for like our next basic support and resistance because I have a few of them already, but just for the newer ones because the group is growing. So I don't want it to be where we stick on one thing too long. Right? There's some people here who are ready to do more. Right? So I'll do some more basic one to kind of understand support and resistance, kind of section lines, and then probably from next week I want to start to push on and go back and do the fibs and there's more advanced things now. Right? We have plenty to see. Any questions from anybody on the live? Anything anybody do understand?
Oh, bro.
Talk to them.
You say, well, I know you say you go to the fibs, right? But when you're pulling the fibs, when is the ideal entry on the fibs? Like, which area the fibs within the red area? If you're looking for buys, if it is looking for sells within the red area above, you know
Right,
what I mean?
right. So I don't want to go too much into it as I say. However, the on the fib there's they pull any fib from where the market break from. Right? So the market break from here. So this candle break this zone here. This is where you're pulling the fib from. Up to the highest point in the market currently. So you have to wait until the market flopping around, right? Until it pull back. The areas you're looking for trades from is in the golden zone. The golden zone is the 61.8% area and the 78.6% area. This is where you will get deep retracements for the market to continue buying. It is also lined up with support and resistance. Right? Is a I'll put it bigger. Okay, this is a whole thing in itself now, right? You see there's also lined up with support and resistance areas, right? So when you pull it, you can find possible entry points. So what you will do, or what you will look for, is you will wait for the market to either pull back to the 78 to the 61% area and then take an entry. So it has give you possible pullback areas too now. If you look at here, this 38% area line up with this resistance here. So what I would use the fib for, right? I used to use it more long time for dollar cost averaging. I don't do it so much more as I kind of really find the strategy a little bit. I don't really bound for it as that. But I would still pull it I would more pull it if it is I find the market in doing a thing now. Or like if I find it pull it mark, but that's my bias is still buys, then I would see where it could possibly pull back to. And if you notice the 61% area now line up with this little gap here that could possibly be filled now. So what you would do, or what dollar cost averaging is pretty much taking different entries coming up, right? So if I want to get like us say take a slightly bigger entry, the lower the market go, then by if I correct in a bias, the bottom entry would compensate for the ones on top now. So what it could be is that now we say the market pull back here, I'll take a buy from this area here. Right? Let me say the market sell off a little bit again. I'll take a next buy from this 38% area here. Let me say the market sell off again. They could take a buy from the 50% area. So sometimes when you see people with real trades and all, this could be what they're doing too. Right? And then they will take an entry all the way to the 70. Usually the 70 will be my last entry point. If I don't get a buy from here, then I go on. Or let me say the market pulling back heavy. And let me say you get a big pullback from here. You could possibly find an entry point using this now, right? So the 61, the 78 is where ideally you're looking for, but you could also get one from the 50. It's just a matter of where the market closes now, right? So like how the 50 line up here, the market could pull back here and close above the 50, you could get entry. Close above the 38, you could get entry. You could keep selling all the way down to the 78, you could close above here, which is also support and resistance, you could get entry. So it's possible entry points that the market has utilized now to push on. Right? So that's kind of how that has worked. So maybe next week when like a subsequent class, I will show you how to set up this and do this and thing now. I said I don't like the classes to run on too long. For me in particular, it has get diminishing returns. Um, I stay at the start for 18 hours a day for years, like about 2 years. Right? It has hurt my head to do it now. And at some point, or they would end up there too. I see so much thing in it now, right? So I don't like to stay at this for no length of time. It's extra off. I hope that answer it. Anybody else? Plus, reason you so much I could soak up here, right? Can't get everything one time now.
Yeah, that light up there, and boy, I know it's the same thing. I'd be like, boy, the chat hurt in my eyes now,
Yeah, yeah,
yes.
yeah, yeah, yeah. Can't sit down and watch that all day. I can't sit down and be staying at it. So that's why I just use alerts, right? So I'll give all that one and all two. So you see like how the market reject here? What I would do is I would just adjust this to the highest point. So this is how I'm sometimes I might take so long for a trade to. I waiting for this market now to break this higher zone. Because this can come up here and reject now. I will set an alert on top here. Right? So if the market break this zone here, then I will pay attention to the chart. Right? Or I would set an alert below here. Right? If the market break below now. Right? Now I wouldn't look for no sells. And I would just like to know that the market going lower. And so I would say it break the low, alright, cool. I will set our next alert probably somewhere down here to see if it possibly give you a pullback now. You remember we're always looking for the pullback, right? So we're looking to enter on red candles. So we come in here now. So hopefully, you possibly might come and get a big red, validate the zone, and then you might look for entry. Right? So when you come on each other, though I know when you're fresh, you're going and just be staying at this because you want to figure it out, which is nothing wrong with it. You could do it, right? But at some point, I say you would get diminishing returns and you would see things that not there, right? So as much as you have to spend time practicing on each other, do sit down, hold it, and stay at it either, and you don't want you don't want to start to see things that it will make up things, right? You don't want to start to see made up things either. And anybody have any other questions? All doesn't have no questions. All does know everything. That is always blow my mind.
Malo, I want to find out this analysis you're doing here, these under trading view, or these from what site is that they
Trading
do
view.
the.
Trading view.
All right, okay then, cool. So all the alerts and all of that, you're going to that and you mark up your market and all of that.
Yeah, so you're using trading view for everything.
Okay then, cool.
Yeah. There you go. Something
So
like that.
I want one thing to say, Malo.
What's that?
So you know me, I burnt to the guy. But at the end of the day, just to confirm what you were saying with waiting on these moves, because you could really be going on the market and you know the correct thing,
Mm-hmm.
and the market will literally throw you into a zone, right?
Mm-hmm.
Where you will just start trading.
Mm-hmm.
And you'll start losing your money, and you always want to try, hey, I have to make back this, I have to make back this. And that's when the market is worrying about in
Mm-hmm.
that zone, because when you're in that zone, the break, the necklines and the breaking and the necklines and breaking and zones gonna be happening right in your face, but your mind's so not there that you're going to be missing the very things that would protect your money or help you make back your money now, boy.
Mm-hmm.
So it's all about, as I say, waiting. Patience is a real big factor in this. Waiting on those timings to trade. You mark up your zones, you set your alerts. When them alerts ping off, you come, you wait for that closing above the zones, and you take your trades when that happen.
Mm-hmm.
So it's a real big part to play in the patience game.
Mm-hmm.
So that's just from, as you say, you get real, what you say, you get real strokes.
What? What?
I just get real strokes, so, because I just challenge myself. I mean, everybody different. I challenge myself and say, let me see how much I learn. Let me see if it's something I can at least hold on for a little bit on my own.
Mm-hmm.
So I will go and I will get my licks and I come in right back to the shot, and the shot is what is bringing me back up to a certain level now, boy.
Mm-hmm.
So it is you just have to know yourself. As they say, you have to know As they say, you go on the market, you get soaked up in greed. I tell you, the market is drawing, is pulling a zone, and you're gonna come out of that zone depressed, basically. So, it's hard to know, you have to know, you have to be aware. So basically, Marlo saving all it from plenty if all you just listen, but because listening is one of the hardest thing in life. So it is true. Um, so yeah, that is just my. I don't say much, but that is my part. Just
Yeah, boy,
the
but
experience, the little experience I have now. But so who
yeah,
coming in and who here will probably going through the same thing or something similar. You know, is really you just had a in at the patience stay game and you'll be fine with on your proper entries and the market is always good. It is always good. It's just the entry point, as you say, wait for that red candle, you take your buys or whatever, and you go.
there you go.
So yeah.
Yeah, man, I good vibes there. I had my first account was 1400 live. This is US. Very first account, and I learned a little trading. You know, yeah, I spent about 2 3 weeks. You don't know, right? It's a new experience, and I was like, yeah, but you know, you see that beginner's luck now. And you jump on and you're cracking them and you're flipping money and it's like, wow, so easy this thing is. Now trading is deceptively easy, deceptively easy. Everybody would have got a little thing where it's like, yeah, boy, I can do this. Until it hook you. And I sit down and lost that whole 1400. Sit down 1 hour. Let's blaze it out. Because you think the market owe you something. Right? So you think that it have to, give you what you want. Because you draw lines on the screen, the market had to respect them lines where you draw, right? And as we all know and experience, that is not true. Yeah, them lines mean nothing, right? Straight true. And I sit down there and take strokes. No, that was one without having a
Yeah,
strategy. Huh? Good.
it's a man. Good night. I'm new to the group.
Yeah.
I just want to elaborate on something. My boy was saying just now, boy.
Mm-hmm.
Meanwhile, you see, as traders, you see, we had to come in with a fresh mind too, boy. You see, like if you think getting back where you lost,
Hmm.
sometimes you get stuck in emotions of trying to, you lose focus or where you're really supposed to do now.
Mm-hmm.
Like, me like to tell you, sometimes you see, as you say, if I could come out with $10 even for the day, because I mean it not hard, but it's not easy to keep it. If you understand, I mean
Mm-hmm.
easy to lose it.
Mm-hmm.
Because me I to tell you, majority of the time, and I just find this as a self discipline that I don't have. Me like to tell you that dailies I come out with I will fund my account and I was trading by myself with just signals alone. But the thing about it is I mean, signals from all different strange people. You don't know the logic that they working with the analysis. Nothing. I just following like a headless chicken, basically. Now,
Mm-hmm.
I mean, I score, but I really ain't score because I ain't take on no profit. Because if you ain't take on no profit, they really ain't saying nothing.
Yeah.
You understand? So once I come inside, like I learning from Malan and like I just wanna listen and absorb as much as possible because as he mentioned to me before, if you're listening to somebody and they're not profitable, you'd really it don't make sense listening to
No.
somebody who's not profitable. You
No.
understand? And I love how your mentality of like how you say you do have money to lose. I love how you're saying that now because but I lose enough.
Yeah.
So I want to be in that mentality, like how you talking now. So
Mm-hmm.
I don't want to be like trying to get back what I lost. I putting that behind now.
Mm-hmm.
You know, yeah. So, but thanks for accepting me in the group and thing, man. I like the vibes.
Yeah. Good vibes, boy, brother, boy. Let me get that
Yeah,
pro tip.
man.
Let me get that pro tip. Right? A pro tip. Here what to do. Here how not to lose too much money. Let me say you enter a trade, right? And you make $10. Your very next trade that you enter, you should not lose more than $10. Mm.
You see my
Say that over,
problem is
I
I
don't
have,
hear you.
I have a gambling kind of vibes now, boy. So that my issue. I have that gambling problem. You see, like how you say, treat it like an investment. I need to come in with that mentality. You know? So I love the words of advice. This class is real influential with certain things what you saying, but I telling you.
Yeah,
As
boy.
simple as it is.
Yeah, boy, brother.
Yeah, yeah. That's why I quite do any buying to like after I get two winning trades or two winning sessions, the following sessions I just drop my risk by half to protect my previous profits.
Protect it, bro. Protect capital. It's like gaming. This thing is like gaming.
Correct.
So
Gaming
that
for
what I
real.
remember, and that what I was saying when you win a two trade and they come out here, you dopamine, you want to run back
Aye.
in there because it's a mona boy.
Yeah.
So you just have to understand yourself. You have to know what is dopamine. You have to know when you get that adrenaline. You have to recognize how you behave, the decisions you make. Because you could get that and then your dopamine up there, and then in the next 10 minutes, your dopamine lower because you're going to take a triple trade. So you had to know yourself now, but yeah, as I make certain wins, I just come off.
Oh, the
I
people
just come off.
come
I
off.
gonna bathe and lie down and relish in that dopamine. No hard people is how to work to get that dopamine, yeah?
Bro. I
So you just have to know yourself.
correct, bro. I love to withdraw, dog. I want to see that money outside, boy. Understand? So I get fall in love with withdraw. If you make $10, pull it out. Withdraw it. Take it out. We like to see numbers big in. Like get big up, like get big in your wallet. Withdraw your money always, boy. Pull out that money, boy. If it was last week Thursday, when I get the last trade and I call it, you see what I done, me even come I call for Friday. I
How
score
often you think we should withdraw though, Marlon?
every day, boy.
Every day?
as you as you win, pull it out, boy. Put it back if you
Yeah.
lost. Pull out your money, boy. You're leaving it there for.
Because I always thought like my equity would have saved like my trades, but like how you
You're
telling me
supposed
pull
to be
out money
holding all that
daily.
drawdown.
Uh-huh.
So
Yeah,
you
yeah.
would grow your account with experience. You must be able to manage your money well. For now, pull out your money, bro. So let's say if you
Yeah.
have 500 in your account, 500 is your baseline. Anything over 500 after a session, withdraw. If you have anything under your 500, you're holding straight until you reach back up. Until you make a $10 or
Uh-huh.
20, pull it out, my boy. We leaving it there
Okay,
for.
okay.
Understand? At some point you will once you get more experience and you get better, you will leave your money in there to grow. So then now you can take bigger
Yeah.
trades. But until then, just try to protect what you have. You know what I mean?
All right.
Yeah, but bro, if like we say make $100 a week, right? Leave 50 in Binance, buy some Bitcoin, leave it so don't take out that $50 and go and eat something, dog. You're working hard for this, Like make the money real, I mean? This money hard one now. This money don't come easy. This is the easiest way to make the hardest money. This is the hardest way to make the easiest money. Hardest way to make the easiest
Yeah,
money, bro.
facts.
However you form that sentence, it's correct.
Yeah.
Yeah, that makes sense. People just feel that you ain't working a 9 to 5 again, but right now you're working 24 hours a day
Working
right now.
hard
No?
for
Yeah,
this.
think about it, no?
This
Working
money
hard,
come
but
easy. Real hard to get this money, but when they get it, they come in like whoa, seconds, But the amount of effort and the emotional turmoil
And you could lose it same way though. How you get is how you could lose it. So you gotta protect it for real.
protect the capital.
For
So
real.
as I
Look last week as I tell you, I do so I was up in profits thinking I say, all right, let me go and see if I could drill the market to this chart. I come and I get my licks. Malo say he come off the market. I say me even gonna open them charts from since Thursday mean open that app.
correct.
Mean see the chart mean because I don't get the quota Alex out again. Malo had to save me next week now, so I cool.
All I know
So
that
yeah, and I like the and me too as I just always tell Malo, I like the experience because we was trading at an all time high, right? None of we you see that pullback he says that's supposed to happen. None of we experienced that yet. None of we. And we get to experience it firsthand, like goal for we there because the market are go on a new high, it go push like that in the future, and we gonna know what to expect now, but we gonna know how to trade in them areas. So at the end of the day, don't neglect the experience again in a way. Even if you take clicks, come out with a lesson now, boy. So that's my mentality towards it now, boy. So it's like I pay to learn that lesson, but at the end of the day, I learn that way. So that's how it is. But I ain't gonna blow my conclusion nothing again. I ain't
Nice.
gonna blow
All
my
right.
conclusion nothing
Malo, if it is
again.
not Paul, my camera turn, you can sit on your side, eh?
Yeah.
Malo, good night.
Good night.
Nah.
First time as well.
Hey.
But I just continue a little bit. I'm watching your chart at the moment. Mine looking a bit different. I don't know. What's the difference?
Okay, so one, the colors will be different, but two, the time
No,
frame.
I know that. I have my colors changed as well, but I'm talking about the chart itself because I'm seeing right now because it's fully on right now, right?
Right.
But I'm seeing one the candle that is moving right now. It's tall and it was kind of short.
What time
So
frame
I
you on? Check the top left hand side, which part you see the mouse is. What
15,
time frame you on?
15 minutes.
I looking different.
Yeah, tall candle.
You sure, yeah?
Mm-hmm.
Big like this?
She could probably have it zoom out, you know,
Yeah,
or
that one
zoom in too
also.
much.
It zoom like this.
Uh,
It zoom.
no.
Check the
Uh-uh.
pull on the numbers on the right hand side. Pull it up and down like this and see if it changing.
I did all that.
And
So could I put on my camera and
yeah, yeah, yeah.
you can see
Good,
it?
good. Let me see what good now it
Okay.
is.
That's not how I turn in. Okay.
Alright. Now see the top left. Ah, you see gold spot US dollar from forex.
Mm-hmm.
Click that. Alright. So I just use one which is the first one. Just gold on top.
This here?
Yeah, the first
This
one.
one here?
Yeah. It,
Okay.
alright.
Yeah. So then whenever you're watching a chat, basically use that
We can use any one, I
one.
just use that one.
Okay, because I find it was looking a bit different, so you know.
It will be generally the same, but I just use the one that one.
Okay. Alright, thanks.
I no sin.
Okay.
Somebody want to share the screen? Isaiah.
Yeah, I was gonna share some this.
Let me see what
Um,
you
but I have it open up on my laptop. How can put my camera here?
It's at the camera button right
Okay.
on the screen there. You'll see a arrow mark up present now. It will be next to the smiley, between the smiley face and the palm. A little square with that arrow and mark up present now.
Okay, with an arrow.
From the left.
Oh,
Right, yeah, right.
nobody says share my screen.
Then what you want to do?
Now what? Put on my camera and turn it now, boy.
But you
So I can show what good am.
oh well. Wait, you want to put what camera you want to put on your phone camera?
Yeah, and turn to show what good on my laptop here.
Me, you know. I don't have phone on the kid. It don't have no icons like on the screen there. Wait, you watching me on? You can share it from your laptop itself? Like share your laptop screen? I see you, and you muted. Alright.
Alright, you see my screen again?
Yes.
Alright, so this is basically this on top here is the highest high closest to the price on the daily, right?
Right.
This one here is the lowest on the daily.
Right.
So the ones, alright, look at here. The white one is on the daily, right?
Right.
The one on the blue is the 4-hour one, right? Right. So I was watching here. So you know market had to come back down, right? So if you watch on this side here, our imbalance here now, right? So price now literally tapping into the zone here. So I don't think much on tomorrow. I just want to know if my analogy right now, right? So more or less how the market open with this gap here, I will say up imbalance down here as well too. The market had to fill out top here first before it sell off, and
At the market, I do nothing.
more or less. Well, you don't have to, but
Um,
Possibly.
so
Couldn't.
that fair value gap thing there, that don't necessarily work on gold. Gold fundamentally driven. So gold already move. That is more of a technical thing. So it could happen, but gold not really driven by technicals more so than fundamentals now.
Oh,
So if a
like more on
market
currencies
momentum,
itself.
correct, gold go and do what it want. Right. So them imbalances and them fair values don't necessarily really work on gold now. Right? So it's
Oh,
not something to really,
just.
base a strategy on with this particular pair. What this is kind of what you kind of want to look for with gold is what happening. So it's more listed to the economics, like what going on in the world. But the more or less you want to find what going on with the U.S. currency, right? Based on what happened with the U.S. currency, that is kind of we could make decisions on. Gold is like a moving trade now, right? Once you pick a direction, it's gone. So if you notice, alright, let me go back here. If you notice how much of that it would I make, like how much of that it make though, and never really fill though. Look at that one here.
Yeah, not really taking it in there for chess.
This a big one. This will be one here. So they're not really something to watch in particular now, boy. Alright, okay, let me leave this one. Right, I really plenty of that gold though. So goal is not really well. If it could say this is one year, but more than likely it don't really mean anything. Well, they could say this one come back into it, yeah. But it don't really mean nothing in goal right now, bro. If you want to, let me say you want to use this one. Let me say you want to use this. How long you wait for that?
Yeah, cause big one down now. Watch all now come down.
Let me
Like
say
real long and
yeah.
short.
Let me say you want to wait. Let me say based on a strategy, based on boy that had to do that now. But if you understand what I'm saying, wait for all of that to confirm now. You know what I mean? Right? So it's not really a super violent thing to trade on gold in particular. Gold is just what going on, dog. People they say it's hard, but gold relatively easy to trade, right? Once once you correct any direction you're going, like you're going in a particular direction, chances are you're going and continue going in that direction, though. So you just have to be on the right side of it. This might break. If it does break, I would take a small position, and it just based on what happened the last few times. I know this time I might be wrong. But I'll take like a small position. I'll put like a stop loss here or something. And if it break, I'll enter. If I enter here or something, I'll put like a small position, a low lot size, put this here, and see what happens. If it does break the zone, let's base on what happen. Um, as for the first person is that anybody who don't understand the strategy or don't understand the support and the resistance and what we doing and thing.
The only thing I did never really understand is how it's gonna be multiple step figure. If you know what I mean. I can see the multiple zones where you go break and retest on continuously level. Because whatever you just last week, whatever your last training, I think it was I want something you want to have up on YouTube.
Right.
And have Ali kind of like the step figure when they pull out the whole time frame now, if you know what I mean.
Oh, so that's just that could be done anyway. No, that's just support and resistance. I'll show you now. So it was just like an indication of So it's like this here. It's just to confirm the trend now, right? But it's kind of the same strategy we're using, right? So once you identify, let me say, um, you identify like, let's know, I'm good on here, bro. You're doing madness right now. Right. So it's kind of like once you identify, Let me say a zone, like a resistance zone, where you're taking the entries from. The market will break, pull in here. So it's just basically, it just keep drawing support and resistance zones now. Just to confirm your trend essentially. See it?
Yeah.
See, that's pretty much that. Until they get like a confirmation. Yeah. That is wait for it. Just confirmation of the zones essentially. Like that. So that lets us know if you're in a zone or not now.
I like that.
Then we just run try last mark up here, see what we could potentially get, and then we sit down and we wait. Check on the daily. Identify entry points via the trend line. Identify a possible support and resistance. Like in this case here, so I would delete this. In this case, we could probably use like the 4 hour. And if you get a trade here, boy, we might get some life here, you know. And come down to like the 15. See what the trading range is. We don't really had a draw because we don't know what's going on. Alright, but if we want to, we could draw this little area here. Alright, which would have been the next 15-minute high that it break from. Alright, so remember, this come like support and resistance here on our 15-minute. It break this. So you shoot up, we get a pull back, it close. So we could have kind of enter here if we get this entry. But this happened just now with the when the market open now. Yeah? So you couldn't really take no trade there. Right? So we can set we are late here. So you say how fast you can mark up your chart. So you don't need people say, well, what time will this take? Well, it don't take no time at all. Alright. Set on alert. For the highs, you're not expecting the market to sell because if we look at the higher time frame, we could see that we just got a little pullback back into our zone. So it created the zone here for itself, and then we know again for a possible push higher, right? So that we was just waiting on. We were just waiting to see where the market exhausts itself from. We're looking for buys. We just fundamentally always bullish on gold. Since the beginning of time, gold never really drop in price now. So there's no reason for you to think it's going to drop in price now. So if we go all the way back, right now we in June 2020. See what we're on here. I we get a little bit of markets, nobody didn't say no. But this is as far as back we could go. So this is September 2010. So from September 2010, which is the amount of data I have here, and we get a little bear market. A bear market is 20% down from the high. 32%, right? So we got a little bear market on gold, no problem. $40 down, no problem, right? So you got to be a market. I mean, the economy would have been doing great all 2014 and thing, right? So the US dollar would have been real strong them time and we got a be a market here. But from the time the market started to change, which would have been in 2015, I don't know what was happening then. I'm not trading them time and I still in school and thing. And you know what happened? The economy started to go, I mean, if it had a war or something, in Afghanistan or something, 2015, probably, I don't know. The market started to go, the American, the US dollar started to go on the decline. So that means gold started to buy, right? And then from here, 2015, if you buy gold here, all the way up the road. Up until now. So what make you feel gold going and come back down here? Chances are nothing now. Right? So we fundamentally bullish on gold. We're just expecting things to get more expensive, the economy to get worse, wars to come. We're just looking for all them kind of thing. Right? So we fundamentally just looking to buy gold. So if you look at and if you go back in the group and you're watching any of this stuff, you'll just see buys, buys, buys. Right? Pull back, buy, pull back, buy. Right? So we're looking for a possible new high to be created, and we're waiting to see if it confirmed by a break above structure. Now, as I was saying, for this particular one, um, I may hold on. I may just enter a small position if we get a break above it. And you can have figure. Once you get like a first close, enter it and see. Right? At a small position, just in the event that we do get a massive push. Now what I am looking at, which I don't really teach, but I do use, is the RSI. So what the RSI does suggest is possible overbought and oversold position. So like if it's above the 70 line here, so you can use it on baseline settings, right? That's fine. Once it's above the 70 line or your top line here, what I suggest is that the market have a little too much buyers in it. So it had to kind of correct itself. So imagine these lines here like guardrails now. So the market is trade within these guardrails essentially. So if it's outside of it, no, it is not an immediate thing as it reach out, it go turn around, but it is due to turn around. So it is due for a correction. And if it's outside of that. So we see in the market kind of touching the guardrails here. So we could possibly get next, a next little dip now. And market kind of high. This could be like a double top, essentially considered as double top, meaning the market come to equal a high and then sell out. So you come up here, it sell, it push again. Because it is a valid chart pattern, a double top. We could anticipate, not predict, but anticipate more sellers will see this and you might get a next little sell off again. Because the RSI done high, right? It done form the short pattern. We might get a next little sell till probably here. If we come and we get a sell off, let me just say we do get a sell off till about here. So either the market come and close, flop around here, then we could look for entry somewhere here, right? So we could get the pullback, enter somewhere here, and then hold our trade till it probably break again. And if it go below, well then we wrong, we lost. Or if the market does have all the figure in the world and it break through it with enough momentum and it close, we could probably just enter a trade and see if it is, we could hold on to something like how it is the market do down here. See if we can catch one of these here. I don't think all the tariff war on the China, America back and all done. I think we can find that to go still. So once that happen, then go in and just keep shooting up the road. Right? Because even if we did enter somewhere down here, we might have been able to hold through this. If even if it's one position, you take some on top here. If the market trying to do this, take some here and then just leave one. Leave one break even. Just in case now. And I might be back up on top here. Right? So yeah. I'll take any last few questions before we wrap it up there. Because as we're looking at trade wise, right? We're just looking for the market to do any of these two things. We're looking for the market to either break below, which we were going to looking for some sells, or we will be looking for the market to break above this high and confirm more buys. So that is what we're looking at. Anything in between the market going above or below, we just not enter any trade. That's simple as that. Has nothing to do unless it break our structure. Huh? Anybody? Well, alright, we go take it there. So I'll just hold on in the group. If we get a trade, I will send it, and then we will function, right? So I'll let them know later. See you on that side.
Yes, sir.
Man.
Blessings.
Brother.
Yeah.
Later.